you will not. Good morning and welcome to another edition of Roadhouse Live. We are live. Today is August 18th, 2023. Augusta, they say, of the 18th. Let's break it down a little bit. We have the Dow down almost 200 points. We have the S&P down about 30, give or take. And we have the Tech 100 down about 135. Small caps down 13. VIX up 3.33%. Dollar sitting there basically flat with gold, last I looked, slightly elevated. That is our morning. That is how we're shaping out. Bender, it would appear that we don't have no stonks anymore.
They're all on sale.
I don't know that they're on sale anymore. I think they were on sale. Now they're just like, no stonks, no more stonks, no more companies.
Well, no. See, the thing with sales is that if there aren't any bargain shoppers, then they do deeper discount.
Correct.
That's the way it works. Like, ooh, this TV was $5.99, now it's $3.99. Oh, you still don't want it? It's $2.99 and comes with 12 months of Netflix.
This is like the section in the dollar store that's not even $1. It's like 25 cents. This is what
Right.
We're looking at it for here. All right. So look, we've talked about a couple of different levels. Look, I think it's awfully pointless to talk about the news because if you literally listen to any of the news items, anything like that, we are so fucking dead. It's ridiculous. Like, there's not even a point in waking up. This is how dead we are. That's if you're into that kind of thing. Some people get off to it. They're like, oh, well, let's slap it. Let's slap it till we bleed. Others, yeah, it really doesn't matter. So I think the news component is a little bit overplayed. If you watch any of the monkeys on TV the last several hours, last several days, it's like we're all gonna die. We've been dead, just haven't known it, and the death blow is upon us. I don't know if the death blow is upon us. I don't even know what this in all reality what this sell is really about, other than because it's been so organized, you have to look at it as being profit taking and repositioning. What I haven't necessarily seen is rotation, Bender. Rotation has not been a part of this. And we're getting close to that baby with the bathwater, buddy. Especially when you see Bitcoin get absolutely just face fucked last night, down 7.5%.
Yeah, it was every crypto took a hit last night, and I mean, as far as news goes, obviously there was Elon saying that they liquidated all their Bitcoin, right? It was 370 million or something like that. And then what I just glanced across that that headline, the Evergrande.
Mm-hmm.
Evergrande. I don't know what the ins and the outs of that are. I mean, can you shed any light on what that, like, what's going on there?
I cannot. No.
Okay.
No. What was it regarding?
Well, it said filed for protection under Chapter 15, and it sounded like.
Oh yeah, no, I read part of it this morning as far as China having its Lehman Brothers moment. Basically, them having real issues over there, and I think it did, just to shed a little bit on it, when they released that latest grouping of data and turned around and said that they're no longer going to be reporting unemployment or underemployment or whatever you want to call it, whatever they call it over there, it really started begging the question, okay, exactly what is going on over there? They've done everything that they can for the most part to stabilize their currency, and it still isn't working. They've warned banks not to liquidate in a lot of ways. Their banks over there, they've been like, no, you best not be selling like a bunch of crazies. So they're trying to prop the market, and it's still not working for them. So
I mean, so what's the point of them even saying they're not going to report on numbers that, I mean, what were they? Don't they just make up numbers anyway?
So if you make up numbers, right? But then you're to the point to where we can't even make up numbers to sell these to our own people, I think is really what it goes down to. I don't think they give too much of a fuck about what the outside world thinks of them internally. Their problem is when they look internally, and this might take longer than it should, but if we go back, over the last 18 months or so, they stayed locked down longer than anybody else. They put their people under the biggest amount of strain and pressure to stay locked down, quarantined up, don't move, don't piss, don't eat unless we give you the A-OK. Then they were supposed to have the big reopening that was a bust on every fucking level. Just a massive bust across the board. Now you have high unemployment amongst the youth, which if there's going to be a rebellion, if there's going to be, discord, if you will, it's going to come from the youth, and they can't lie to them to the extent of what the truth actually is. So them saying they're not reporting it is kind of like, because if they're like, oh, unemployment is very low amongst the youth is going, you fucking stupid. No, it's not. No, it's not. So I think they're having their own internal issue in strife from a societal standpoint that, is uneasy footing when it comes to people like Xi. He needs everybody on the same page. And if he's failing diplomatically, if he's failing economically, then what the fuck is he there for? I think that's why you've had the pressure to stabilize their market. That's why there's been like an edict laid down that said, you sell, we're going to beat your fucking ass. Now, going back to Evergrande, yeah, it's a little bit difficult to cover that one up. They can cover it up internally, but not externally. Their individual data, they totally can cover it up. 100%. I know that probably doesn't answer the question, but there is issue with China.
Yeah, they filed for bankruptcy in New York, right? Mm-hmm. So just trying to understand the sort of fallout, implications, impact. I'll have to dig into this a little bit more, but yeah, I mean, it obviously, as you said at the beginning, headlines in general are not hunky dory. Everything's fine. Now, these cycles of headlines, I feel like, right now they're coming in waves, mm-hmm. Right? Like
it's the fire.
Let it all out. Yeah. Yeah. So, the best thing that I can try to do for myself is, just continue to focus on these levels on the charts and, if it doesn't respect a level, then that tells me all I need to know, which is, okay, they're not ready to buy.
Yeah,
they're still going to sell.
It's becoming increasingly difficult to do that because the chart, relatively speaking, is pretty much fucking busted. Unless you're like waiting for this falling wedge to stop falling. It's like, is that what we're doing? Is that the game? We're going to wait for the falling wedge to stop falling. And based on how it's been falling, you know, it could be damn near a third way back up before we can even truly recognize that. And identifying what is a relief bounce and what is, you know, the quote unquote bottom. So it's like, I don't know, man. It's like, I think I posted in the room earlier that I thought 355 was bottom ish on Q as far as where it could bounce. We're there now. I think we kind of wicked into it a little bit. So that was an area that I was looking at, you know, about a week or so ago. That it was like, okay, so 355, you know, that could be a level on Q that we bounce. So far, we haven't really cracked into it, and we are bouncing a little bit here coming into open. The rest of it, man, it's like when we start looking at some of these levels, it is a shit show out there, dude. A real shit show. And the data has not been bad. You know what I mean?
I know what you mean.
ERs have not been bad.
So look at this chart. This is an 8 hour. Yeah, I'm doing a little show and tell.
Well, can we at least be respectable and make a fucking right shoulder before we go down more? Can we at least do that?
Well, there is that. But so this is a fib channel, right? And I'm using the same channel that we've been watching, which was, you know, essentially this part of it right in here, right? This was the midpoint that we were looking at of that original channel, or not the original, but the channel that we had kind of been watching. That was the midpoint. And, you know, this is one deviation higher of the channel. This would be 2. And you can see how those come into play, right? And if we're using that sort of the maths, right? Then that puts one deviation lower is down here of that channel. So if we were to do the same sort of thing that we did here, which was, you know, it's not perfect, but essentially from, you know, if you had a channel from this low to this high and then duplicated that lower for one standard deviation, that was this move right here. And you can see just kind of the size of the move doesn't look a whole lot different from this one, right? So if I'm looking at it that way, then it's like, okay, well, one deviation lower from this channel would be down in here. So, you know, that gives me an idea of sorts. Like this was the 618 off this up move. You know, we talked about that yesterday. We talked about the, you know, this 50 to 61.8%, that box kind of being in here. The other thing is, if I switch this to regular trading hours so we can see the gaps and whatnot, you can start to see there's this gap that's down in here. There's volume imbalances and shit right in here. So, you know, the midpoint of these channels often acts as, you know, you get price action around the midpoint, you get reactions. So if we're looking at one deviation lower, this is the midpoint of that, right? So there is a possibility that we're at that midpoint, that we bounce around this midpoint and then run to the bottom of that channel to that full deviation. It also may run straight through it. Remains to be seen today.
Take us back into psychology, I think, a little bit as far as what's next, because it's like the headlines are there for them to flush, like complete and that create that panic flush. The headlines are there. The question is whether or not they want to put it in the butt of the players that are looking for that flush. If we're going to play, premium and options games, that kind of stuff, break, overall consistency and trend, they would rip us back up before they send us lower. So it gets back into psychology more so than fundamental. At least that's what I see when I look at your chart.
Yeah. So, well, and, having this picture, kind of bigger picture view of these deviations gives me, some ideas and things to look for when we start zooming in and we get into intraday price action. Knowing that this is a possibility that exists, then I'm looking intraday for clues. So this 4368 half, which was this swing low right here, we broke that, right? So we're currently sitting 4360. So, on bounces, if we do get a bounce, that 4368 half, let's zoom this in a little bit here. Let's go to a 60-minute. So you can see where that comes in. 4368 half, kind of in this 60-minute fair value gap. So on a bounce, if we get up into that 4368 area, I'd be paying attention to see how it reacts to that. And then the bottom of this, where that 618 retracement is down at 4350 half. Moving into a 15-minute. Zoom in here a bit because there is a volume imbalance sitting right in here. Right there on the 15-minute. So I'm going to keep an eye on that volume imbalance to see if we can get through that at some point. If we can get through that and get above this 4368 half, there's another one right up in here. So if we're going to get that continued flush, maybe they come fill in some of this 15-minute fair value gap up into this volume imbalance. This is the midpoint of that channel.
How many handles
right here? The midpoint would be about 12 up from here. So maybe they go up and check that. And if we're going to see any sort of continuation, then it would need to get above that and hold, and then it can work its way up in here, 4390. If we're going to keep selling, and they're going to keep pushing it down, then you have the bottom of that. You have that 618 down there. 4340, 75-ish. And then this gray box here came from that when we were looking at the 8-hour chart. There's a fair value gap in there and an actual, that's where that, let's go back out to, this is where that comes from, is in here. And going back to the regular trading hours, you can see that's kind of the lower end of that channel is where that gap comes into play. Right in there. So that's just under 4,300, 4,292. So that would be what, another 60, 70 handles down from here,
which is wildly achievable.
Sure.
Wildly achievable. Sure. It just depends how they want to do it. Yeah.
Yeah. So that's the.
Isn't this one of those times that you tell me that net inventory is like 8.7 trillion% short coming into the morning?
It's actually not. It's, I think, last time I saw it was like 60, 66 or 64%.
That's discouraging. That means a lot of cats are way the fuck underwater.
Mm-hmm. Yep.
Huh. All right. So I don't think we have Sonny. I think we do have, the master of the debaters. We have Mr. Stonkington. Stonkington.
Hello.
How was your field trip?
Oh man, I'm here. I took a field trip. I saw some kind of cool stuff. The oldest one of their buildings in California. They made some snow plows. They made some parts. They got some Teslas. Biggest fleet of Teslas of any government agency in the country. So there's that. It was good times. And I saw the market, and I think we've gotten a key piece of data yesterday. We can make a red candle when I am nowhere near my guitar, I think was the lesson of yesterday.
I think you kept on threatening it. I think that was part of the problem.
I was nowhere near my guitar. I mean, those are some red candles, it looks like. I wonder.
I was wondering if it's because we can all hear Hells when he hits the button now. That if they're just paying attention to that.
Yeah, I'm going to start muting my mic before I hit it.
Yeah,
it's like I'm going to start doing that. I already have enough fucking conspiracy rolling around in my head without adding that they care about my my handful of contracts I'm sitting here trying to work with.
Well, if you ever decide to read our DMs, the instructions are in there. So you got that going for you when you're ready. Well, we can look at some charts. Am I trying to share? There we go. All right, let's jump into the NASDAQ. This one's blank, but we'll kind of recap what we've talked about so far. So if anyone's like, this Mr. T is full of shit, we can go back through things that we've talked through here on the show in the past, see how they've been playing out, and then see what we're going to be looking for next, basically. So a couple weeks ago, we were looking at this fair value gap here. Was this one. And we said, once this candle closed below this fair value gap here, I mentioned I would be looking for this one to work as resistance, which we got the candle closed below, went right up to that and rejected and pushed down on the weekly. So that one worked pretty well. And now this is all balanced on the way down. We got the push back up. So if we're thinking about that, and that's kind of what I'm always looking for when I see fair value gaps. So that's why I say, okay, we've got this amount of time left for a candle to close above or below a specific line, because once it closes past that level or within the fair value gap, that gives me the signal to either look for it to work as support or resistance or not, basically. So if we switch to the monthly, this is the one I've been talking about a bunch this week on the morning show. We've got this fair value gap here. Oops. And now, so we're going to say, okay, on a monthly, we've got, 2 weeks to go? If we close below this level here on the NASDAQ, then same thing. We're going to be looking for this area to work as resistance. And same as what we did yesterday, I had drilled into this fair value gap, and then you can do fibs into quarters of 0.5, or 0.25, 0.5, 0.75. and you split this one up into quarters. We saw some reactions against that. But now that we're below, we'll be looking, so what's going to be the next draw? And so this is all potentially, we've got this whole area here. So that's another fair value gap below. So that could be potential draw. And then you could also start splitting this one into quarters as well. So that's kind of the idea behind it, but I have the other chart here that's kind of already marked up, so we can dive into that. So I've got some of this already marked here. Yellow is going to be the daily gap, so we've got one there to there. Above, yesterday's daily candle, that created one. And then we've got this low to this low here. All this orange below is that monthly gap that we just looked at. So again, from here, we could draw fibs to here. So that's one split into quarters. So we could see spots as we pull back that we might see reactions. And then if we jump with this weekly. So the other Mr. T theory here is that this candle here, because it was the down close candle on the weekly before we ran up, that this was a bull that brought this down to bring it back up, which would mean we could look at the midpoint of this wick down here to potentially have a reaction. And I've got some 4-hour fair value gaps marked up that kind of line up with that. We scroll back over to here. So here, kind of in this area, so these are downside targets that we'd be looking for reactions on. But again, that order block was on a weekly, and it's just a big wick because he just brought it back down to there and ripped it up. So, we have the daily gap above. There could be a draw into this because it's like they obviously don't want to make it easy. It's like, yeah, headlines and everything, but I can't imagine, unless they're just going to, just rip us straight down and it's going to be a trend that everyone's like, oh, I'm waiting for the pullback, then, we'll see what we get. But these will be the levels I'll be looking for. We'll call them in the room. So that's kind of just like the Mr. T look at what we've got set up on the NASDAQ going into today. We can jump over to the Russell, do the same thing. I kind of clean this one up and we can start on the daily. So here we've got daily fair value gaps getting left behind as the Russell rips to the downside. Those are all the yellow boxes there. And then here to here is going to be a volume imbalance that we've found and we're sitting on right now. I have just marked up this low. These are basically relative equal lows here. So there's going to be stop sitting down there. And then these orange lines is going to be this weekly fair value gap. Now, same thing. If the Russell closes below this orange line on the weekly, so today, then this all becomes potential resistance, right? This would be that fair value gap. We got the close below, so this would become resistance. And then again, we could split this area into quarters, and then, see, we might get some reactions, which also, if you see, would line up with our daily fair value gaps. So that's kind of what I have marked up here on the Russell, kind of that thought process behind what I'll be looking for there. The other one, just so we know what we're looking at here, will be this. There's a volume imbalance down here on the weekly, which then also line up with filling a daily fair value gap. So that's why it's kind of overlapping there. So these will be the levels I'll be calling out, looking for on the Russell. And then if we can jump into the individual tickers really quick. Apple had a big dark pool, which it has lost. Last night it came in at 174 flat. But looks like my triggers will still be in play here. Maybe just for make sure we don't get try to go short with the bounce down there. So I'd be looking for 171.90 to the downside on Apple. Above, this is the big dark pool line. I just kind of lumped everything all in together at this 173.57, not too far off from the 174 above. So that's what I'm going to be looking for here on Apple. And the other one I had on the list was AMD, which looks like we have gotten a little bit of a sell. So I would just adjust the put trigger to right there. keep an eye on that 102.60, and then we could bring down the call trigger. Just watch, kind of give it that range. Use a nice round number, psych level 104. And that's all I got.
Man says that's all he's got. What, you got anything else, Bender?
No, I don't think so.
No. Okay. So just to go back to Evergrande a little bit, basically they file for Chapter 15, which is not a bad thing. It basically puts them in a position to kind of renegotiate some of their shit, some of their problems that they have and the issues that they have. Their real estate holdings are a massive weight on them. Just for example, they have 1,300 projects in more than 280 cities across China, and they have lost just a crap ton of money. I think something like and they're currently holding about 300 billion in overall debt. So this gives them an opportunity. Filing for Chapter 15 here in the States gives them the ability to kind of rework some of that debt, which is, again, not a bad thing. And I think that considering that them completely defaulting as they did in 2021 would be such a black eye, like, to the overall picture of the Chinese economy, that their government is going to help them do whatever it takes to not look like shit. So this is probably more of a positive thing for them once you get past the shock and awe of the headline, if that makes sense for me and me reading it. No, but at the same time, I'm also the one who will look at it and say, you know what, Tesla lowering prices is a good thing because it allows them to create more market share because they're going to receive more money and services down the road. So I'm on the outside looking in on that type of mentality, as opposed to some people saying, oh, their margins are the margins. How did Amazon build their business? By just ripping market share. That's how they built their business. How have they destroyed Ford and GM, relatively speaking? By being aggressive and going after it. If there's anybody who understands the marketplace, it's Tesla, because they operate in real time, not on fucking Excel spreadsheets and whatever bullshit these other companies operate in. It's like that mentality is, oh, the margins. It's like, that's fine. These are the same fucking morons, and I'll say it with such anger, directed at how fucking small their brains are and how fucking stupid they are. The same people that were like, well, people aren't buying iPhones anymore, it's a hardware issue. And then what does Apple do? They start pumping services up the ass, left, right, and sideways. And they're like, oh, well, I guess they're not just a hardware company anymore. I guess they get services money too. Okay. It's like, this type of shit and this type of stuff that continues to come out on companies that basically pace the development of this society and planet is fucking ridiculous. It's like any idiot who wants to sit here and talk about, well, you know, margin compression. You want to talk about margin compression without talking about market share and without talking about service revenue, fucking go jump off a cliff. You're a fucking idiot. Those are my words for today. That's all I have to say about all that there. Fucking sick of these fucking idiots. That's it. That's it.
And there you have it, a Hell's rant.
That's it.
All right.
Fucking
we got
and fucking shove it up your ass, you fucking sock puppet motherfucker.
7 minutes till open. 7 minutes till open. Be safe. Have a good weekend. See ya Monday if you're not, where we live all day. That's it. See ya.
See ya. I hate them.